Malaysia's largest oil palm plantation company, Felda Global Ventures Berhad, warned that it may record its first full-year loss for financial year 2016. In a Bursa filing, FGV attributed the potential losses to seasonally lower crop production during the fourth quarter and the reduced competitiveness of CPO prices, particularly compared with soybean oil, while slower global growth and the continued volatility of the currency market would have a significant impact on its operating conditions. It was no surprise then when FGV reported deeper losses for its third quarter of FY 2016. The company's net loss came in at almost 95 million ringgit, almost triple its net loss in the previous year's corresponding quarter. Revenue likewise fell by 7.1% to 4.2 billion ringgit as compared to 4.5 billion ringgit the year before. FGV blames lower CPO production and higher raw sugar costs as the main culprits for poor earnings. It's another good quarter for AirAsia X Berhad. The carrier swung to a net profit in its 3Q, chalking up 11 million ringgit from a net loss of 288 million ringgit a year ago. Revenue grew by some 24% to 982.4 million ringgit, boosted by increases in scheduled flights revenue, ancillary revenue, aircraft operating lease income, and freight and cargo revenue. It did not declare any dividend for the quarter. Based on the current forward booking trend, AirAsia X expects the number of passengers in the fourth quarter to remain promising. The low-cost long-haul airline operator also said the forward loads and average fares are trending better than the previous year. It is expected to report a profit for this year after posting 2 straight annual losses. It was a steady quarter for Tan Sri Kwek Leng Chan's Hong Leong Group of companies. Hong Leong Bank Berhad, the country's fifth largest bank, saw net profit for its first quarter of FY 2017 grow by nearly 8% to 542.6 million ringgit, while revenue similarly grew by 7.1% to 1.1 billion ringgit due to prudent management of loan pricing, funding costs, as well as higher non-interest income. According to CEO Dominic Fuda, global prospects are expected to stay subdued and loan growth is expected to stay moderate, but the bank will continue to concentrate on its digital offerings and improving operational efficiency. As for sister company Hong Leong Financial Group Berhad, its first quarter earnings were dampened by poorer earnings in its insurance business. HLFG reported a flat net profit of 386 million ringgit for the quarter. Despite that, revenue grew by 3.1% to 1.2 billion ringgit, thanks to higher contributions from both its commercial and investment banking businesses. According to President and CEO Tan Hong Kund, HLFG will continue to execute its strategies to build sustainable long-term value for its shareholders. HLFG declared a dividend of 13 cents per share. Despite a more optimistic outlook on emerging markets, especially in Asia, Blackrock Asset Management North Asia Limited still kept its underweight rating on Malaysia. Managing Director Stephen Moller says, although certain things are beginning to improve, certain things need to happen before Malaysia's rating can be upgraded. Among the things that need to happen first is the structural reform, which should happen on a broader base, better progress on social reforms, as well as better clarification on GST. However, Moller stressed that the market remains fluid and its movement will depend on the policies to be implemented by US President-elect Donald Trump. As for the ringgit, Moller expects the currency to weaken further against the US dollar, with the downward trend to continue in the near term. The man at the centre of a money laundering probe linked to 1MDB, former BSI Singapore banker Yeo Jia Wei, made millions in just 15 months after leaving his job. Prosecutors say Yeo racked up nearly 24 million Sing dollars or 74 million ringgit through secret profits. Deputy Public Prosecutor Tan Kiat Peng said in court today it was quite unbelievable that Yeo could earn that much money in just over a year, just by being an introducer, intermediary, independent consultant and relationship manager. Yeo, who is on trial for witness tampering, disagreed. He said his client was one of the biggest sovereign wealth funds in the world. The ex-banker's client included 1MDB and Abu Dhabi-owned IPIC subsidiary, Aba Investments PJS. Yeo added that there was nothing illicit and that he managed to make so much money because he was an independent consultant and could negotiate his fees directly.